So here we go. As expected, the Bank of England has increased the base rate by a much larger proportion than they have in 27 years. 1995 was the last time they did such a big increase. And what's happened is we're now gone from a rate of 1.25% to 1.75% in the August 2022 Bank of England meeting. That 0.5 percentage point increase, that's double what we've seen for the most of this year so far. It's a 6th consecutive increase to base rates. So why is this important? Well, I'll talk in a moment, as I do every time one of these announcements comes along, about that impact on your savings, on your mortgage and other borrowing. But let's quickly talk about that decision first of all, because it's nice to give you a sense of where things are going, what else was in the minutes of that committee meeting, so you don't have to go through them yourself. As I say, yeah, so the 8 people, there's 9 people on the committee. This one is the largest majority since this year at least, in the meetings this year. 8-1, they decided to increase that rate by 0.5 percentage points. One person thought we should just do it by 0.25 percentage points. So it just shows you, as a group, they're definitely sort of thinking, well, we need to take more action, go a much larger increase. It's smaller than what we've seen elsewhere around the world, in America and in Europe as well. They've had larger increases, but again, the largest one in 27 years for here in the UK. This is why they're doing this. Well, it's because inflation keeps getting higher and higher. So it's currently at 9.4%. That's the most recent figures we got from late July. But the prediction last time we had one of these meetings in June was inflation might get to 11% at some point this year. And that is largely because of oil and gas prices, energy prices, meaning, we're spending, you know this, you've not been sticking your head in the ground, you've been following this, I'm sure, in the news, getting higher and higher. So we'd see yet more inflation, peaking at 11% in the autumn. They're now saying it could peak in Q4 at 13%. And that's down to this massive prediction on those energy prices going up by 75%, the price cap going up by 75% on the 1st of October. We know for sure at the end of this month exactly what it is, but based on that, based on other things going on, what's going on in Ukraine and Russia with the oil and pipeline and so on, we will get that much higher, 13%. And in fact, the Resolution Foundation, which is a think tank looking at this stuff, they think it could get to 15% at the end of this year, early next year. So this is going to carry on. We're not going to be out of the woods anytime soon. And if that's going to carry on, then it probably means we're going to see more interest rate rises as the year goes on. Now, the Bank of England in their minutes, they say they predict that by next year, sometime next year, it will be around 2.5%. That's how interest rates will go to. So we've got potentially 3/4 basis points, percentage points increase still to come for the spring of next year. But apparently the markets, this goes to the stock exchange, all that kind of stuff going on, they're pricing it again to a 3% rate. That's what they think it will get to. Again, who knows? But again, all these signs are rates will increase, keep on increasing. So that's what's happened. That's the news. Let's go and see what this can mean for your mortgage and your savings. And it's the same thing that we've said in previous months. But obviously this larger increase, that might have a more significant impact on savings. But let's talk about mortgages first of all. Very quickly look at this. If you are in a fixed mortgage right now, you are locked away for 2 years, 5 years, 7 years, 10 years, whatever it might be, then you do not change your monthly payments at all. And most people are in a fix. The majority of people with mortgages, that's fine. They will not see any change for now. Of course, if you got a fix when rates were 0.1% and they're going to be hitting 2.5%, 3% by next year, and who knows how long they'll stay at that rate. They could be like that for a while. They could come down, could go up by the time your fix finishes. But let's say your fix finishes in a year's time. Well, you'll be paying a new rate. You'll be getting whatever is available based on the current rates right now. And we have seen in the last 8 months, all those really historically low mortgage rates disappear, those fixed rates disappear. And now they are a lot more expensive. And they've actually risen by more than the base rate increases have come along. So it's just worth bearing that in mind. If you're fixed right now, you will pay more. And if we are likely to see more increases come along later this year, early next year, then worth thinking now. If you've got 6 months before your fix is due to end, you can actually lock in now. Yes, those rates will increase. Even today, we'll see rates disappear that were available yesterday or last week. But again, you can lock in now 6 months ahead of you needing to do that. So it's well worth doing that. If you are fixed for longer, further ahead of that, then most likely your best scenario is just to sit it out and just wait and see. Be prepared for a much more expensive mortgage when it gets there. It may be worth, I think it's very unlikely for most people this is going to be worth looking at. It may be worth seeing if there are exit fees in your mortgage, how much they are and what the cost of that would be to get out of that mortgage, plus what the arrangement fees would be for a new mortgage, which might give you more security in the longer term. But the risk to pay with that could be very expensive, and you're losing this low rate that you've got right now. Of course, not everyone is on a fix, and these are the people who are going to see those increases happening right now. If you want a tracker mortgage, which basically means it's the base rate plus a set rate, that will go up almost instantly by 0.5 percentage points. That could be quite a lot of money going extra, depending on the size of your mortgage, obviously, coming out every single month. Nothing you can do about that other than maybe remortgage, but again, looking at whether that's worth doing or not. You might have a decent tracker deal, still might be less, but that will get higher and higher. If you're on a standard variable rate mortgage, and there aren't a huge number of people on there, but there are a number of them. There was a report that came out this week showing I think it's about 350,000 people, something like that. Then you are going to begin already paying over the odds, because then these are the most expensive types of mortgages most often, and they will also increase. Maybe not by the full 0.5 percentage points, but they will go up and you'll be paying more. So it's well worth, again, like I said about people who are already on a fix, having a look and see if there are better deals out there, ones which you can go to right now and get a lower rate and lock yourself in, maybe prevent those future rises if we see them. Again, we're 1.75% right now, could get to 2.5 or 3% by early or mid next year. You're protecting yourself against that. That's mortgages. Very quickly on other borrowing. Again, if you have a product already, you've got a loan, car finance, whatever it might be, that's not going to change, obviously. But when that finishes, if you go to get a new car or get a new loan, those rates will be higher. Exactly the same with the mortgages. Credit cards, those interest rates might increase. But again, I talk about this all the time. If you haven't already watched it, I've got my 3 credit card rules video. Make sure you look at that. It's very, very, very important, if you can, to clear that balance and not get charged any interest. But yes, there is a chance that interest will be added onto that. Same with overdrafts. At the moment, they're all around at 40%. We haven't seen any movement on overdrafts since these increases started in December 2021. There's no reason to say they won't start to nudge up a little bit. So again, borrowing will get more expensive, but hopefully if you're locked in on anything right now, that won't change too much. But let's look at savings. And if you've watched one of my updates on this before, you'll know that, yes, an increase on the base rate is good news for savers. But you also know it's very unlikely that we see the full amount passed on. So in theory, if the base rate was 0.1%, it's now 1.75%. That's a 1.65% increase from last December. Surely, if that was passed on to all savings accounts, then the minimum you would get anywhere would be 1.65%. That is not the case. Even the best buy right now at the time of recording this is 1.8%. The next one, 1.71%. Yes, they have passed on increases, but they were not at zero before. They were at a more middling point, somewhere in between. So the full amount does not get passed on. So don't suddenly expect your interest rate to suddenly jump up by 0.5 percentage point. That isn't going to happen. However, this is a larger increase, as I said, that we've seen than any other increase we've seen since December, which has been roughly 0.25% most of the time. Apart from right at the beginning, it was 0.15%. Anyway, those individual increases, small amounts, we see maybe half of it added on. If the same thing happens now, maybe we will see 0.25, 0.3% added on to some of those rates. Now, if you're lower down the market, that increase might not even bring you up to the best buys right now. So what's the point of doing that? I wouldn't. We saw Marcus this week increase rates by 0.15%. So they went from 1.35% to 1.5%. Yes, that's an increase, but it's still lower than what you can get elsewhere. So what's the point? Okay, don't just assume that an increase is a good increase. Okay, you want to be looking for that best possible rate. What's going to be really interesting to see now, though, is the reaction from banks like Chase and Virgin Money. They have put a lot of their marketing funds actually into high interest rates to encourage us to save with them. Obviously, Virgin Money, earlier on, they started off with 1%, which at the time was amazing. Then they went to 1.56% and then recently to 1.71% to try and get to the top of the table. Chase came in earlier on at 1.5%, and that was, again, the best buy for quite a long time as well. Chase now at 1.5%, that is languishing behind. And I think people will start to go, all right, maybe I should put my money over there or over there, particularly if other banks start to surpass them. So it'll be interesting to see what they do. If there are any updates, I will obviously update you straight away, both on the blog, the nice Best Buy savings tables at becleverwithyourcash.com/savings. So make sure you check that out on a regular basis for whatever the best, highest paying accounts are, not just easy access, but fixes, regular savers, things like that. And also here on the channel as well. So keep an eye out for those kind of things. I think I wouldn't be surprised if there isn't some kind of movement, but whether we see a substantial movement, that's going to be hard to say. And Virgin Money as well, they've just done a couple of increases. I would imagine to put that effort in now, maybe they will kind of go again. Al Rayyan again at 1.8%, that Sharia compliant bank. So yes, I think I wouldn't be surprised if we get close to 2% in the next few weeks, early September, maybe go beyond that. So do you move your money now? Do you wait? This is hard to say. It depends how much cash you've got in your savings accounts. And I think we're very much in this country now, we're in a sort of place where people have got nothing or they've got a decent amount. There's very few, kind of middling amounts. But you may well have that. Everyone's different, obviously. But since the pandemic, savings have been eaten up by people who don't have much money. That's gone. And now with the cost of living crisis, more of that's going to be sort of taken up as well. If you don't have much money in savings, by moving it for like a 0.1, 0.2% difference in your savings rate, you're not going to get too much more. So maybe just sort of hold fire and let's see what happens in the next few weeks, next month. If you've got larger sums, then absolutely, yeah, give it a go. Maybe move it across, particularly if you're getting less than 1.5% right now. That would be the bare minimum right now, I would say. If you've got that, maybe stick on it. If you've got less than that, you should be getting 1.71% with Virgin, at least in the short term. My name is Andy Webb. Thank you so much for watching. Let me know in the comments below how you're going to be impacted by this latest rate rise, what you think is going to happen to the savings rates out there as well. And check out these videos here for more on your savings.